The Indian share market witnessed a decline on February 21, 2025. Both the Nifty 50 and the BSE Sensex closed in the red. The Nifty 50 fell by 0.67%, while the Sensex dropped by 0.66%. Losses in the financial and automobile sectors fueled this trend. Concerns over U.S. tariffs and import duties on electric vehicles weighed on sentiment. Several individual stocks grabbed attention amidst the market downturn. ICICI Bank, a major private sector lender, witnessed a decline in its share price. This can be attributed to the overall weakness in the financial sector. Mahindra and Tata Motors, prominent players in the automobile industry, also faced the brunt of the market sentiment. Their shares tumbled due to the potential threat posed by reduced import duties on electric vehicles. This development could intensify competition from foreign EV manufacturers. On the brighter side, L&T Technology Services experienced an uptick in its share price. This positive movement followed an upgrade by Macquarie, a global financial services group. Religare Enterprises, a financial services company, also witnessed gains after the Berman family increased their stake, solidifying their control. At the close of trading, Hindalco, Tata Steel, Eicher Motors, Larsen & Toubro, and SBI Life emerged as the top gainers. These companies, representing diverse sectors, showcased resilience amidst the market volatility. Conversely, Mahindra & Mahindra, Adani Ports, BPCL, Tata Motors, and Adani Enterprises concluded the day as the top losers. These companies, primarily from the automobile and energy sectors, bore the brunt of the prevailing negative sentiment. Tata Steel, however, presented a silver lining within the otherwise gloomy automobile sector. The company's shares rallied after announcing a significant fundraising plan of 3,000 crore rupees. This move instilled confidence among investors, boosting their outlook on the company's future prospects. Gold, often considered a safe haven asset, lost some of its sheen on February 21, 2025. On the multi-commodity exchange, gold for April delivery opened lower at 85,715 rupees, reflecting a decrease of 310 rupees or 0.35%. Throughout the day, it traded at 85,795 rupees, marking a 0.27% dip from the previous day's closing price of 86,024 rupees. In major cities across India, the price of 22-karat gold stood at 7,970 rupees per gram, while 24-karat gold was priced at 8,695 rupees per gram. These figures indicate a slight softening in gold prices, possibly influenced by global factors and currency movements. The decline in gold prices can be attributed to a complex interplay of global economic indicators and investor sentiment. Despite its safe haven appeal, gold prices are susceptible to fluctuations driven by factors such as interest rates, currency valuations, and geopolitical events. Section 4. Rupee rides a roller coaster. The Indian rupee experienced a volatile day on February 21, 2025. It initially showed signs of strengthening against the US dollar but later stabilized due to increased demand for the greenback from importers. The trading rate hovered around 86.6325 rupees per dollar, reflecting a marginal gain from the previous day's close. However, the rupee couldn't sustain its upward momentum and eventually settled at 86.71 per dollar, marking a depreciation of 7 paise. This fluctuation highlights the sensitivity of the Indian currency to global cues and domestic economic factors. Despite positive global cues, the dollar-rupee forward premiums witnessed an increase. This can be attributed to lower U.S. bond yields, which impacted investor appetite for the Indian rupee. Section 5. RBI's Balancing Act. The Reserve Bank of India has been actively managing the rupee's exchange rate. Their recent interventions in the currency market have helped mitigate depreciation pressures and reduce hedging costs for businesses. The RBI noted a decrease in the real effective exchange rate in January, indicating a relatively stable rupee. Investors are eagerly awaiting the minutes of the RBI's February meeting, where the central bank announced its first rate cut in nearly 5 years. This move signals a shift in the RBI's monetary policy stance, potentially impacting the rupee's trajectory. Furthermore, the RBI conducted a $10 billion rupee swap auction to address cash deficits in the banking system and ensure the smooth transmission of its rate cut. This measure suggests the central bank's willingness to tolerate a weaker rupee to support economic growth.